What's up, YouTube family? I'm coming to you with another market insight video, giving you an update on today's trading, everything that's going on in the market today. So we opened up 600 points higher on the Dow Industrial Average. We're crossing the 200-day moving average on the S&P 500. We have positive news about vaccines for COVID-19 coming out. There is so much to talk about. I'm going to jump into all of that coming up next. Hello everyone, my name is Paul Zachary Shelton Jr. and I'm the Chief Investment Officer of Warwick Shore Advisors. We are a wealth and investment management firm located in Orlando, Florida with clients all across the United States. If this is your first time coming to my channel, I ask that you please hit the subscribe button, please like this video, please share this video to help me increase the financial literacy of our globe. Before we get into today's topic, I want to offer up a free financial planning cheat sheet. Now, this financial plan cheat sheet will give you a snapshot and an overview of your financial health as it is today, and it will also provide you with an asset allocation that you can use currently in today's investment landscape. So let's jump right into the markets. So as I mentioned earlier, stocks opened up significantly higher after the Memorial Day weekend, and much of the gains were stimulated by the opening of the U.S. economy. As of today, all 50 states have reopened to some capacity, with many states moving to phase 2 of their reopening process. This is good for the economy. As the economic activity continues to pick up, stocks across all sectors of the economy are rising, but especially in the sectors that were really beat up during the early volatility caused by this pandemic. The S&P 500 broke above the 3,000 level for the first time since March 5th. Yay! This is a very exciting thing. And it has officially rose above its 200-day moving average. A rise and close above the 200-day moving average is often seen as a trend reversal in the index. Closing above this level will provide additional support for more growth higher. It is, for whatever reason, if there is resistance for the S&P to maintain its levels above this trend line, it is possible that we could see a leg down and more volatility in the market. The relative strength index is currently at 61, which is on the upper end of the band between 30 for oversold and 70 for overbought. I actually reduced my bands down for all my research down from 80 to 20 to 70 30, just to give me a sharper view and a cleaner read, I think, on the short-term movements of the market and of the stocks within the market. The Dow Jones rose above 25,000 and the NASDAQ is 4% off its all-time high. And that is crazy just to believe in such a short amount of time that the market has responded and recovered so well. Part of that recovery that we've seen today was in the data. One of the few data points that are very positive in our economy right now is the consumer confidence. And surprisingly, in the month of May, consumer confidence rose. And just as an educational tip, and just for many of those out there, if you have any questions about any of the data points that I mentioned, please leave a comment below. If I say something that you truly don't understand, or you may not have heard of the term before, I tend to get really technical sometimes in the jargon, and I speak really fast sometimes. So just slow me down, leave a comment below, and I'll answer all your questions. But for those of you that may have the question about consumer confidence, it is really defined as the degree of optimism for the state of the economy, and it's based off the savings and the spending rates of all the citizens within the economy. So it's pretty much given an economic read on how the individual consumer feels about their opportunity to make money or receive money in the near-term future, if we could break it down that way. And much of the near-term excitement around money has been predicated on the economic impact payments that were given out to all the consumers, and some of the stimulus that were given out, to corporate America as well. Consumer confidence was expected to drop this month, but rose on the hopes of the U.S. reopening and moving towards phase 2 of reopening for many states and for many businesses, and additionally all the stimulus money that has been disseminated all across the United States, and additionally all across the globe for that matter. More hope for a vaccine for COVID-19. So, every week it seems like there's more and more hitting the headlines with the biotech industry. As of right now, every firm out there, I believe there's over maybe nearly 120 or 110 different companies out there that are working on a vaccine for COVID-19. Eventually we're going to get one, but it's just going to take some time for it to happen. So each time we hear about something new happening in the market, we're going to see a pop as more positivity is coming to the market, is leading to the potential of a vaccine being there. So today, that pop was Novavax. It's moving forward with this human studies of experimental coronavirus vaccine. The stock was up a little bit over 14% during the middle of the day in the trading session, and is moving in a very, very similar movement as Moderna did last week. Remember last week in the video, I mentioned how Moderna jumped up on its hopes of its vaccine, or the initial trials of its vaccine showing promise. And then I advised everyone that, when the market rises up just like this, be careful. This is not the buying signal to get into it at this time. There are so many companies that are working on a vaccine, and more than likely there will be a handful of companies that will ultimately get to the magic formula that will produce that vaccine. But it may not necessarily be the time to run into one individual name. As we saw last week, we saw some additional volatility in Moderna after there were some questions about its trial results that came out and that were raised, and the stock began to pull back a little bit. Not saying that this will essentially happen with NVAX, but it is possible that we are so early in the stages right now. Just moving forward with the human trials is a good thing, but there will not be any results known until early July. So I would be careful of running into the biotech space, at least from an individual stock selection, without having significant due diligence behind it. It takes some time for each one of these vaccines or any medicine that is produced to be approved and disseminated on a mass scale to the market. So it's going to take a significant amount of time before we see anything significantly happen or come about this. However, if this is a sector that you are confident in, leave a message below, leave a comment below, and I'll share with you some ideas on how to gain exposure to this sector while reducing selection risk. If you have any questions about anything that I discussed today, I ask that you please leave a comment below, leave a message below. Please like this video, please share this video. Please subscribe to my channel. I report all things financial on a regular basis. Thank you so much, and you have a great day.